Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. We have to should perhaps be red. Okay, let's go red because the stock is down, but we like it. We've explained why on our NVIDIA Gold special, which preceded this show, was before this show. So we're ready. It is a beat on earnings, not a massive beat, but it is a beat nevertheless. We're very, very happy with that. The stock is priced for perfection, but it's all about guidance and what they say on the call, which makes tonight's presentation so exciting. So we are now live on the extra channel and the main channel. If you want to jump out of the extra, or if you want them both, if you want to run both behind the scenes and in front of the scenes, you can do that. Some of the Lucasades, the main members do that. Zach Russell, you become a member on the extra channel. Thank you very much indeed for your support to the extra channel. If you become a member on the main channel, you can have things like reviews, and you can have many perks. I'll tell you all about it should you be interested in that. All right, okay, let's get ready. Let's see where we are. Let me just check a few things. We're live, just checking a few things around the studio. We're all looking good. Let me check the back of the studio. Yeah, everything's live streaming, beautiful. The earnings for Microsoft is 35 minutes away. We know it's a beat, but it's all about the presentation tonight, what we get on the presentation. It's so important. So we're just waiting for that now. So while we're waiting, we'll do a few bits and pieces. We've got a great audience tonight. We are going to be here, of course, tomorrow with the FOMC report live. We're also going to be bringing you the charts of Microsoft and NVIDIA after tonight's show as well. So there's lots of stuff coming out. Very excited about that. Let's see who's in the show first. David Ewan, I like this stream better because I'm not a member of the extra channel. Okay, you know you can be a member for 99 cents, David. That's all it is. I hit the like button again, 007. Yeah, if you hit it twice, you kind of cancel it out. Not a good idea. Lance Strength, how are you this evening? Good to see you, mate. Good to see you. Okay, welcome, everybody. So what we're going to do now is we are going to put a few of these, we're going to run a poll, and we're also going to put this on X. So just bear with me as we do that. We've got a little while to go, so the chat is open for conversation. We've got the chart video coming out for you later. You all know, I know I'm cheap. No problem, mate. No problem, mate, at all. Don't worry about that. We appreciate your support here. Right, let me just put a post out then. So, put this on X. You might want to vote with me. Microsoft, Microsoft earnings live. Join us for live chat and support. And I'll give the link as well. So we've got the link for that. Here we go. So let's put that out. And the hashtag MSFT. And micro. Let me share with you what I'm doing. We've got half an hour to go before the call starts. So I want you to all see what I'm doing. I'm on my X account. If you haven't yet followed me on X and you want to know about my trades and my interviews with CEOs and all the stuff that I'm doing, there is my X account. I've just put it for you in the chat. All right, Microsoft. For some reason, I can't spell Microsoft anymore. There we go. And my hashtag, Martyn Lucas Investor. Okay, there you go. Just wanted to show you what I'm doing so you know. We're going to run a poll here as well in the moment. So MSFT, let's add that there as well. Okay, there's the Microsoft earnings. Great. Now then, I'm going to put a poll here. I'm going to ask your opinion. All right, so you can all vote on this. And this will be very interesting because we've seen this massive sell-off now with Microsoft and NVIDIA. And we've explained why I think this is incredibly bullish, not bearish at all. Is this a buy, hold, or sell for you? Please vote in X poll. Okay, there you go. So we're going to give you the options of buy. Are you buying it now? Are you holding it now? Sell, or are you undecided? You can be undecided, of course. We'll let the poll run for 7 days. And this gives indication of how people are trading and investing. So there it is. It's right at the top. So let me give you my X account again. There it is. There's my X account. If you want to go and vote on that poll, we'll watch it throughout the earnings and see how it changes throughout the earnings. So we'll leave that there. I'll also put it on Facebook. We've got a lot of investors who follow us on Facebook as well. So we'll put it there. If you do want to follow me on Facebook, you can. We'll, of course, be covering Meta soon. I think that's tomorrow. We'll also share that to the group as well. We've got a group as well that follow us, an investor group on Facebook. There we go. Give that a second. All right, we've done that. I just wanted to share it all with you. If you want to follow me on Instagram, you can. Let's create the post there. The vote, of course, is on X, though. If you want to vote, it's on X. I've just given you that post. Microsoft, there you go. Let's make it 16:9, of course. That's how we do everything. And if you want to go and vote, you can. I've given you the link. Share there. And also, we are on Threads as well. For the hell of it. Why not? Right, there we go. I often get asked, why do you like your own posts? Because I love what I do. And I always, because I've got OCD, kind of OCD anyway, I just like doing everything to the max. So I always like everything just because if I haven't done it, I go, I haven't liked it. I need to like it. I get stressed out. Right. Okay. If you want our newsletter and our giveaways and all the rest of it, there's the all links page, martynlucas.com. You can call in and you can be part of that. There's the extra channel if you want to be on the extra channel as well. We just had that earlier. That goes in between all the live shows. And right, it's time to read your comments. We are ready and we are all set for the earnings. We're just waiting for the call to start. We're coming down to it now. So let me read all your comments. Let's have a look. Evening all. TJ Malden. I need this show right now. Tolga ooh. Tolga I. Tolga ooh. Tolga I. Yui. Tolga ooey. Tolga ooh. I don't know. Tell me how you pronounce your name, Tolga. David Ewan. When I hit 1 million, I'll subscribe to every channel you got. When you make $1 million, you're going to spend 99 cents on the channel. Well, that's very generous of you, I must say. Meta took a hit after close as well. Perfect. That's what you want. What a week, man. Absolutely. I love it. Crappy week, but maybe we hit at the bottom. So now it's back to, yeah, I agree. Good evening, Lucas 8. It's just getting tea ready. I love it. Why did Microsoft go down before the earnings call? Because that's what it does. We just explained it on the previous show. That's exactly what it's supposed to do. This is perfect. We need an outside catalyst to turn us bullish again, in my opinion. If non-farm payrolls and FOMC hint at a rate cut not happening in September, the bleeding will continue. It's 100% it's going to happen. There's no two ways about it. We're very, very confident of that and very, very excited. Over there on Twitch tonight, I'd love to hear your take on Microsoft. 6% drop after earnings were beat, though. Any Hood is still to speak on the call. Amy Hood is still to speak on the call. We are looking forward to the call. I am not concerned at all. This, to me, is a perfect rotation. This has been exactly what we expected. It's driving everything down to buy it back. Quality has been dumped for rubbish. Rubbish is all about to be sold and come straight back. This is a perfect thing. I bought by owning the S&P. Very sensible thing to do. Zach Russell, I'm right with you 100%. I'm all in on the S&P. Absolutely. I'm all in because not only is it the right thing to do, but it's also the right thing to do for the show and you, because I do not pump and dump stocks. You wouldn't believe what I said if I was buying individual stocks. So I only own the S&P. This is all of the money I have in the world. I have no money in the bank. I share it all with you, so you know that this is real. I'm not here to build the biggest YouTube channel in the world, but I am here to build the best. It's a legacy for me. For those of you who don't know, I'm the world piano man. I've toured all over the world as a world piano man. I've had my own West End show, my own Vegas show, and I'm now just trying to help people and have fun. And making money is easy. It's easy to make money. The hard part is to keep it. I own Nvidia is the only individual stock I own since I transitioned away from owning individual companies. Fair enough. AMD beat earnings. AMD beat earnings. Thank you very much for sharing that. I was absolutely spot on with Nvidia. There it is. Look at that. Literally to the dollar. We said $100 was the bottom. It would bounce. Explained it all, and we are spot on. AMD. Did they beat on it? Oh, nice. Very good. Very good. AMD, 68 cents, 69 cents. Very good. The reason why they're up so much more, of course, because the market cap is a lot smaller, and there's much more room for the stock to move. But the company itself is Nvidia is by far the strongest company. This is very bullish now for the S&P. Very bullish for that 3x by Tom Lee for the end of the decade. Love it. With the greatest turnaround in history. Love it. What a time to be in the stock market. Absolutely great. Thank you very much indeed, Time Attell, for bringing that information. You should be a member of our channel because you could share that onto Discord. I can make news on it, cover it for you. So thank you so much for providing that information. Oya, Tolga Oya. Is that correct? Oya, have I pronounced that correctly? I hope I have. Jimmy, long songwriter, just subscribe to us. Thank you very much indeed. Yeah, I told you I was cheap. Nothing wrong with that. Breaking, the Magnificent Seven stocks have now erased a combined 2.6 trillion of market cap over the last 20 days. But they haven't, though, have they? They've only done that to the stock price, not the valuations of the company. The company is still making profits and still a great business. I now want to own it even more than I wanted to own it before. This is very good news for me. Very good news indeed. AMD saved Nvidia today. No, they didn't. Nvidia saved itself. Nvidia saved itself. This is all a manipulation right now. Not a bad manipulation. Doesn't mean it's a bad thing. But I do think that people have sold, or institutions have sold, Wall Street have sold just to buy back. They know these companies are solid and they'll be buying them back. The Russell is about to get dumped, an almighty dump on the Russell. I don't want to be in there. I don't want to buy cheap rubbish. I want to buy quality, and I don't sell, and I just keep buying when it goes down. I thought Powell wanted a 2% inflation target. He's got it, but he's using backward lagging indicators. Europe, UK, India, all know that we've got inflation at 2%. And remember, he wasn't waiting to get to 2% before we would drop the rates. He just wants to move towards it. And we're already there. Microsoft, massive drop right now. Massive drop. Look at that. We're down 7%. An opportunity here. A huge opportunity. I love it. I love it. They actually beat on earnings as well. Anyway, we'll be coming to that in a minute. We've got just a few minutes to go. Yep, spot on. Thank you. How much do you charge for private section? If you are a gold member, right, first of all, we're not here to make money from you. I'm not here to sell training programs. I'm not Meet Kevin desperately trying to get videos and YouTube likes and buy a plane. Let me explain this. I am not a YouTuber. Even though I'm on YouTube, I broadcast on YouTube. Elton John broadcasts on YouTube. Would you call Elton John a YouTuber? No. Would you call anyone who has a successful business who broadcasts on YouTube a YouTuber? No. I just use this because it's the best medium to be on. I was voted as the world piano man. This is my TV studio. I've toured all over the world as an entertainer with my own theatre shows, concert halls, and all the rest of it. I'm here to help people, so I don't charge for training. We provide it for free, okay? I'm here to help people. If you are a member of our channel, all right, which is just a couple of bucks, we will help you. And the only reason we charge a couple of bucks is so we can verify you're a real user and so on. Now, 98 you will see in a normal show, not tonight because we're very, very busy. In a normal daily show, 98% of our live viewers are members. Higher than Mr. Beast, higher than any other channel in the world. We have the highest engagement rate of any channel. People watch all day, every day. No one else has that. Okay? And so we have, you asked about training, we have, here is the membership link if you want to become a member. We have Ed Nevius who provides scalp trading. He's paid to learn to do it. He provides it to you for free. Very often one-on-one for free. Okay? If you are a gold member of the channel, all right? If you are a gold member, I will give you 1 hour private Zoom call every month for free. It's just part of the perks that you get as a member of our channel. Okay? That's what it's all about. So there you go. We don't charge for the training. We provide it free. This is not financial advice. This is my real journey, my real money. And remember, I started with $5,000. I'm now worth a grand total of $103,408 in 3 years. I've never shorted a stock and I've never done options, not once. All right? So hard work, dedication and commitment and providing a service rather than trying to sell videos is what we do. And people seem to like that and they respond to that. Right. You are very good at the piano. Thank you, Christopher Kramer. That's very nice of you. Wait. There was the info. Where was the info on scalp trading? Okay. So every day, Ed Nevius comes into our show live and he is discussing live in Discord all our scalp trades. He's very, very successful. Very risky. As you can see, day trading is very risky. There you go. And he makes a lot of money and a lot of our members make a lot of money scalp trading. He won't just tell you what he's buying and trading. He will tell you how to do it. He will tell you how the charts work. He will teach you all the ins and the outs of doing it. He wants to educate you. And we have cash giveaways. We've got a big cash giveaway coming up soon where we're going to give away a few $100 in cash to you to trade with. We're just here to help people, right? So how do you get the scalp trading? Okay. We have a Discord channel. This is our Discord channel. It's free to sign up on Discord. However, you will not see any channels at all. They are completely invisible until you do one of two things. Either you become a YouTube member and we'll upgrade you for free. That's a perk of being a member. We'll upgrade you. How we upgrade you is you come into the chat on YouTube live and say, I've signed up, my username on Discord is whatever, and then I will upgrade you. And you'll see all the channels, including Ed Nevius's scalp trading channel. If you don't want to become a YouTube member, you can just subscribe as a subscriber to Discord and you will see it that way. Whichever way you want to do it is fine. And Ed Nevius will provide you the training. Sensei will provide the charts. He also has a channel in our server. If you want, as a member, to then send news in about your favorite stock, as a member, you can do that in a channel on the server called Links for YouTube. And live in the show, I will cover the news. You can request earnings. You can say, Martyn, can you cover the earnings tomorrow night? And I can do that. I can do full reviews for you. All of that stuff is provided for our members. So we've got just 15 minutes to go before the earnings starts. So let me give you a few of those links. There is Alpha Spread. This is the most advanced AI software to review stocks. I know the CEO and I get a discount for you and a free plan for you better than Bloomberg, CNBC, Alpha, Seeking Alpha, all of those people. You get a free plan using that, or you can go premium and my membership, the discount you get will make my membership for free. There is the music channel. I'm live every Friday night on the music channel. If you become a member, you can have a song. This is my music channel every Friday night at the same time. I've just done some videos here for the Olympics. I also recorded full blown out videos with dancers and Vegas showgirls and all kinds of stuff. All right, there's my Vegas show. There's when I did with Elton John's jacket, doing Candle in the Wind and Lion King. All of this stuff you can see on the music channel, right? And there's the concert on a Friday, upcoming live stream, live concert. If you're a member, you can have a free song dedication and you can get to keep the video as well if you want to dedicate a song to a loved one. What else can I give you? We got a few minutes to go before the earnings begins. So I'm just giving you some links right now. Let me send you back to here. We're watching Microsoft. What else have I got? There's the membership link. There's Instagram. There's X. There's the all links. The all links gives you all the links in one place. Also, if you sign up for our free newsletter, I don't email you all the time. It's just a backup for the channel. Should we ever lose the channel, I can email you and say, hey, my new channel is, that's all I do. Unless there's something really, really urgent to tell you, I don't send you emails. I don't use the emails. It's just there so I can send you a birthday card and a Christmas card if you personalize it and if you put your date of birth. And I only ask for the month and the year, not the, the day and the month. I don't need the year, okay? So there's that. There's the extra channel where we're live 12 hours a day. I gave you Discord. There it is. If you do Discord, then I've already explained that, right? Okay, we've done all the links. Don't forget Ya Ding Dong. That's right, Friday night, Ya Ding. We've not done it for a couple of weeks, have we, Vaz? The lowest NVIDIA can go is 95 resistance, but likely it will go higher much faster. Let's see the reports first. Now then, many of you are excited about NVIDIA. We will cover NVIDIA live. Tomorrow, we are covering APLD. Applied Digital. APLD, we'll cover it live on this channel after hours. We'll also cover Meta tomorrow. We might have to do a double show. I'll ask Sensei if he can do that. In the morning, we've got FOMC report. We've got 10 minutes to go before the earnings. Here is the Fed report. If you want to join us, we've got Jerome Powell live on the show tomorrow. Just me. I'm the only person who's got Jerome Powell on their show tomorrow. That's a joke in case no one gets my humor. There is Jerome Powell FOMC in the morning. This is when the markets are going to go absolutely berserk. There is the FOMC. Can't wait for that. Oy, oy, oy. Right, taking a breather. I've been going since 6 o'clock this morning. That's now 10 hours. I've been live all day, working, doing the shows, and so on and so forth. So let's take a breather for a minute. Now then, I've done all the work for you. I want you now to help me out. To help me to help you. There are 101 lazy people watching this show right now. 101 watching, and we only have 30 likes. People just forget. The reason why I ask you to like is if we get 100, YouTube will suggest the video out. We'll get more people will learn about Microsoft, and they really need to know about Microsoft because we're going to have a really good earnings tonight, a guidance, which is what it's all about. They know what they've got to say. I know what they're going to say. No, I don't. Yeah, I do. Right? Okay. So there you go. We want let's get the movement going. We've got 10 minutes to go before the show, before the event starts. I have my own playlist. I know. The sun always shines on TV, and what's the song bloody called? Oh, bugger me. What's it called? Oh, bugger me. What's it called? Baz. Ya Ya Ding Dong. And how do I know that? Because I can see all the looping going on. I know what you're doing. I love it. Right, ready? Smash the like button. We want 100 likes before the event starts. You got 9 minutes. Let's refresh. Let's go. 50. Okay, we're halfway there. Come on, let's do it. We want the world to know about Microsoft tonight because we want Microsoft, Nvidia, the S&P, all of tech to go up. This is a bullish review. So, 5, 4, 3, 2, 1. What are we up to now? 50? Come on a minute. What's going on here? There's 95 watching. This is ridiculous. 5, 4, 3, 2, 1. What are we up to now? 51. All right, it's going slow now. You're getting lazy. You're getting lazy, so I'm not gonna bother. All right, show less. There you go. All right, fair enough. You've had enough. You're tired now, right? You're tired. You're worn out. You're worn out. Okay, let's get ready for the earnings. Let me show you what we're going to show you. Does that make any sense? Let me show you what we're going to show you. It makes sense to me. There's Microsoft. There's the advanced chart. And here is the presentation. There is the audio coming through. Lovely. All right. So let me just mute that. We are live now. Let me unmute it. There you go. Microsoft earnings will start right here in just a few moments. Okay. I wonder if we can zoom out. Yes, we can. Full screen. Boom. Get in. Right. There you go. There it is. There is the earnings. We've got just a few moments to go before that starts. There's no point pinning in just there for a moment. We've got 7 minutes to go. Let's get everybody in. Let's read all your comments. Did you see the 10-hour version dropped in the breakfast bar? Did you see the 10-hour version? What 10-hour version? Breakfast bar. Let me have a quick look on Discord. Oh, we've got lots of new members on Discord. Just signed up. So, if you've just... I'll look in the breakfast bar right now. If you've just signed up for Discord, remember what I just said. You cannot see the channels unless you are a YouTube member. And then tell me what your username is, and I'll upgrade you in the chat. We've just got... These are new ones. See all these? These are all brand new. Cooking Stock, Davis, We're Making Money, Aka, Renlil, CFT, Omeretta, Marcio. All of you that have just tuned in to Discord in the last few minutes, okay, you can't see anything. You got two choices. You either become a YouTube member and I'll upgrade you for free, or you become a subscriber of Discord and you'll see it that way. Okay, you can't see all of these channels. You can't see Ed Nevius's scalp trading. You can't see Sensei's tips. You can't see stock news, breakfast bar. None of this. What's this going on here then? What have I missed this morning? The 10-hour version. Someone's got a great mug. One of my mugs. Look at that. One of my mugs. I'm loving it. What else have we got? What's this? I fitted LED backlights to my new show. Ha! I love it. I love it. Look at that. Look at that. That's James 007 has got backlights behind his TV while he's watching the show. Now that's what I call some colour. That's what I call some colour. I like it. Right, I like it. Now we're running out of time. We've got 5 minutes to go. Just subscribe to the All Links page and text messages. Now I can get me a birthday card from Mark. Yes, you can, David Ewan. You'll get a birthday card as long as you put your name and as long as you've put your date of birth in there. You will get a birthday card. That's right. That's right. If Jerome drops a July rate cut, I'll be so happy. The sun always shines on TV is one of your best performances. Thank you. Done. Isaac, what have you done? Isaac, you said done. What have you done? If you've become what have you done? Oh, hang on. I've got Disciple 7. Disciple 7 has just waved at me. That's very nice, but I can't upgrade you. I can't upgrade you unless you are a YouTube member, which you're not, of course, because I would see, or you become a YouTube Discord subscriber, whichever way you want to do it. If not the best ever on the music show. 3 minutes to go. Microsoft deep green by open, please, Martin. Make it happen. I'll make it happen. Don't worry about that. Did you check out my sunrise photo this morning in the Breakfast Club? You were the only one up at 6 a.m. today. Team Fusion. Let me have a quick look. Breakfast bar. Yes, I just talked about it. I just bloody spoke about it. Why aren't you paying attention? I just said, there's my mug and sunrise. You got to pay attention, Team Fusion. That is absolutely lovely. I can see all the pictures. Lovely. Lovely. Right. Extra Channel's very busy tonight. Behind the scenes. And we're just about ready to go. Come on, guys. Let's like for Martyn Lucas. There you go. Do that. 2 minutes to go. Craig, do you remember that Monday party a few months ago? Best party ever. If Microsoft has good earnings, can it impact Nvidia? Of course it can. Of course it can. Yes. Already affected Nvidia. Yes. They're all together. Oh no, Microsoft only made 22 billion profit this quarter. Let's dump it. It made more than that. It made 62 billion actually. Yes. That's it. Let's go and buy the Russell. Let's go and buy broken companies. That's what people are doing on purpose. It's okay. It's bullish. They're doing it because they're driving it down to buy it back. Zach, Mr. Bond, beautiful TV setup. I agree. Thumbs up. Meta smashes earnings tomorrow. Nvidia is going higher. Yes, it is. Hey, Martin, what about Mondelez Q2 earnings if you can? Ivan Silver, I can cover the earnings, make reports on it. As a member, I can. I can't do it if you're not a member. I've got so many reviews to do for members. It's one of the perks. Right. No more questions for the moment. Let's get ready for the Microsoft earnings. Here we go. Have you all tapped the like button? Let's listen in. 2 minutes. Now, typically earnings go 1 or 2 minutes late, so don't be surprised if it's 1 or 2 minutes late. God, how many earnings have I covered? Hundreds in the last 3 years, and it's quite typical that we get a minute or so late. All right, let's get ready. Here we go. There is the earnings. There is the chart. There is the presentation. Here we go. There is the audio. Bloody hell, they're blasting it out tonight. They're blasting it out tonight. Okay. 1.5 minutes to go. Typically, they'll be 1 or 2 minutes late. That's expected. Then we'll go full screen and bring you all the information. All right. How many people have we got watching? We've got 467 through the stream so far. That's that number there, look. Number there. We've got 23,000 views over the last 12 hours or so. One of the busiest times we've ever had on the channel. 28,000. Bloody hell. We were at 28,000 half an hour ago. We've done 110 subscribers in half an hour. This has been one of our best ever times on the channel. I can't thank you enough. This is very, very exciting doing this right now. Okay, here we go. 30 seconds to go. Has everyone smashed the like button? Hope Microsoft smashes it. Well, they've beaten earnings. They've beaten earnings by about $500 million over last earnings, over last expectations. It's all about guidance. If they can tell us that they're about to make money on on AI, get ready for the fun, and that's why I'm all in. Okay, they're playing audio. We are now, it's now time. There'll be a 1 or 2 minutes late. I'm listening into the audio. The moment it stops, I will bring you the earnings. I'm not playing the music for copyright reasons. I'm just going to keep jumping in and waiting. I bought NVIDIA. Congratulations. I would just own the S&P though. That's the better buy. That's the 3x. NVIDIA 2x. All right. That's what I think. All right. Okay. Huge surge in subscribers today. Very impressive. David Dewan, thank you very much. Just a bit of luck, really. It's just a bit of luck. If you work hard and keep working harder than anybody else, and no one works harder than me, I'm live 12 hours a day, every single day, 5 days a week, and I work all weekend as well. No one works as hard as me. I provide a good quality stream. I think I've got the best live streaming studio on YouTube. I always tell the truth. It's real. It's live action. If you keep going live, keep working at it, every now and again you get a lucky moment. And if you're there and you're playing the game, just like being in the stocks, you rally and you boom. It's not about me. It's just me doing the right thing, waiting for the magic moment. And today we're having a magic moment. But if you sat on your ass, you miss out on it. Keep working. The moment will come. Today we had a semi-viral moment. It's my first ever viral moment on this channel. I've had it on my music channel when I did the Andre Bocelli weekend. I had a viral moment. I had 20,000 views in about a minute. Here we go. They're playing audio. It's different audio now. It's not their build-up music. The moment it starts, I'll bring it to you. Normally 1 or 2 minutes late. We're now 2 minutes late. Any moment now. I keep jumping in and out. We are playing it live. I just don't want to bring the audio yet. Okay. Tap the like button, guys. And please click the share button underneath the video. We've got a poll running as well, which we're going to share with you in a moment. If you want to vote in the poll, and you want to promote this stream and your vote as well, there's the X account. Okay. How many hours a night do you sleep? I sleep 8 hours. Literally. I work all day. I have my dinner. Me and Leah watch Coronation Street. I go to bed. I get up. I work. That's my life. And I love it. I've got the best job in the world. I've done everything I've ever wanted to do. I've traveled to every country of the world. And now I just want to build the best, most live, most honest YouTube channel in the world. And we have 3 of them. The music channel, this one, and the extra. And when I've built the best YouTube channel in the world, I can do massive multi-million-dollar fundraisers for charities and do good. And that's all I want to do. And then when I get really old, I can give the channel to somebody and they can carry on where I left off. Makes my life worthwhile, right? And in between now and then, it's a great deal of fun. I love it. What an honor. Every morning when I walk in here, I'm just muting the music, waiting for it to start. Every morning, I get excited, very excited. Oh!
Close to our fiscal year. All up, annual revenue was more than $245 billion, up 15% year over year. and Microsoft Cloud revenue surpassed $135 billion, up 23%. Before I dive in, I want to offer some broader perspective on the AI platform shift. Similar to the cloud, this transition involves both knowledge and capital-intensive investments. And as we go through this shift, we are focused on two fundamental things. First, driving innovation across a product portfolio that spans infrastructure and applications so as to ensure that we are maximizing our opportunity, while in parallel continuing to scale our cloud business and prioritizing fundamentals starting with security. Second, using customer demand signal and time to value to manage our cost structure dynamically and generate durable long-term operating leverage. With that, let me highlight examples starting with Azure. Our share gains accelerated this year, driven by AI. We expanded our data center footprint, announcing investments across 4 continents. These are long-term assets around the world to drive growth for the next decade and beyond. We added new AI accelerators from AMD and NVIDIA, as well as our own first-party silicon Azure Maya. And we introduced new Cobalt 100, which provides best-in-class performance for customers like Elastic, MongoDB, Siemens, Snowflake, and Teradata. We continue to see sustained revenue growth from migrations. Azure Arc is helping customers in every industry, from ABB and Cathay Pacific to La Liga, to streamline their cloud migrations. We now have 36,000 Arc customers, up 90% year over year. We remain the hyperscale cloud of choice for SAP and Oracle workloads. Atos, Kohl's, Daimler Truck AG, Domino's, Haleon, for example, all migrated their mission-critical SAP workloads to our cloud. And with our Azure VMware solution, we offer the fastest and most cost-effective way for customers to migrate their VMware workloads too. With Azure AI, we are building out the app server for the AI wave, providing access to the most diverse selection of models to meet customers' unique costs, latency, and design considerations. All up, we now have over 60,000 Azure AI customers, up nearly 60% year over year, and average spend per customer continues to grow. Azure OpenAI Service provides access to best-in-class frontier models, including, as of this quarter, GPT-4o and GPT-4o Mini. It's being used by leading companies in every industry, including H&R Block, Suzuki, Swiss Re, Telstra, as well as digital natives like Freshworks, Meesho, and Zomato. With 5.3, we offer a family of powerful small language models which are being used by companies like BlackRock, Emirates, Epic, ITC, Navy Federal Credit Union, and others. And with Models as a Service, we provide API access to third-party models, including, as of last week, the latest from Cohere, Meta, and Mistral. The number of paid Models as a Service customers more than doubled quarter over quarter, and we are seeing increased usage by leaders in every industry, from Adobe and Bridgestone to Novo Nordisk and Palantir. Now on to data. Our Microsoft Intelligent Data Platform provides customers with the broadest capabilities spanning databases, analytics, business intelligence, and governance, along with seamless integration with all of our AI services. The number of Azure AI customers also using our data and analytics tools grew nearly 50% year over year. Microsoft Fabric, our AI-powered next-generation data platform, now has over 14,000 paid customers, including leaders in every industry, from Accenture and Kroger to Rockwell Automation and Zeiss, up 20% quarter over quarter. And this quarter, we introduced new first-of-their-kind real-time intelligence capabilities in Fabric so customers can unlock insights on high-volume, time-sensitive data. Now on to developer tools. GitHub Copilot is by far the most widely adopted AI-powered developer tool. Just over 2 years since its general availability, more than 77,000 organizations, from BBVA, FedEx, and H&M to Infosys and Paytm, have adopted Copilot, up 180% year over year. And we're going further. With Copilot Workspace, we offer Copilot native end-to-end developer productivity across plan, build, test, debug, and deploy cycle. Copilot is driving GitHub growth all up. GitHub annual revenue run rate is now $2 billion. Copilot accounted for over 40% of GitHub revenue growth this year and is already a larger business than all of GitHub was when we acquired it. We're also integrating generative AI across Power Platform, enabling anyone to use natural language to create apps, automate workflows, or build a website. To date, over 480,000 organizations have used AI-powered capabilities in Power Platform, up 45% quarter over quarter. In total, we now have 48 million monthly active users of Power Platform, up 40% year over year. Now on to future of work. Copilot for Microsoft 365 is becoming a daily habit for knowledge workers as it transforms work, workflow, and work artifacts. The number of people who use Copilot daily at work nearly doubled quarter over quarter as they use it to complete tasks faster, hold more effective meetings, and automate business workflows and processes. Copilot customers increased more than 60% quarter over quarter. Feedback has been positive, with majority of enterprise customers coming back to purchase more seats. All up, the number of customers with more than 10,000 seats more than doubled quarter over quarter, including Capital Group, Disney, Dow, Kyndryl, Novartis, and EY alone will deploy Copilot to 150,000 of its employees. And we're going further, adding agent capabilities to Copilot. New Team Copilot can facilitate meetings and create and assign tasks. And with Copilot Studio, customers can extend Copilot for Microsoft 365 and build custom Copilots that proactively respond to data and events using their own first and third-party business data. To date, 50,000 organizations from Carnival Corporations, Cognizant, and Eaton to KPMG, Majesco, and McKinsey have used Copilot Studio, up over 70% quarter over quarter. We're also extending Copilot to specific industries, including healthcare, with DAX Copilot. More than 400 healthcare organizations, including Community Health Network, Intermountain, Northwestern Memorial Healthcare, and Ohio State University Wexner Medical Center, have purchased DAX Copilot to date, up 40% quarter over quarter, and the number of AI-generated clinical reports more than tripled. Copilot is also transforming ERP and CRM business applications. We again took share this quarter as customers like Thermo Fisher Scientific switched to Dynamics. Our new Dynamics 365 Contact Center is a Copilot-first solution that infuses generative AI throughout the contact center workflow. Companies like 1-800-Flowers, Mediterranean Shipping, Synoptech will rely on it to deliver better customer support. And Dynamics 365 Business Central is now trusted by over 40,000 organizations for core ERP. Microsoft Teams has become essential to how hundreds of millions of people meet, call, chat, collaborate, and do business. We once again saw year-over-year usage growth. Teams Premium has surpassed 3 million seats, up nearly 400% year over year, as organizations like Dentsu, Eli Lilly, and Ford chose it for advanced features like end-to-end encryption and real-time translation. When it comes to devices, we introduced our new category of Copilot Plus PCs this quarter. They are the fastest, most intelligent Windows PCs ever. They include a new system architecture designed to deliver best-in-class performance and breakthrough AI experiences. We are delighted by early reviews, and we are looking forward to the introduction of more Copilot Plus PCs powered by all of our silicon and OEM partners in the coming months. More broadly, Windows 11 active devices increased 50% year over year, and we are seeing accelerated adoption of Windows 11 by companies like Carlsberg, Eon, National Australia Bank. And now on to security. We continue to prioritize security above all else. We are doubling down on our Secure Future initiative as we implement our principles of secure by design, secure by default, and secure operations. Through this initiative, we are also continually applying what we are learning and translating it into innovation for our customers, including how we approach AI. Over 1,000 paid customers used Copilot for security, including Alaska Airlines, Oregon State University, Petrofac, Wipro, WTW, and we are also securing customers' AI deployments with updates to Defender and Purview. All up, we now have 1.2 million security customers, over 800,000, including Dell Technologies, Deutsche Telekom, TomTom use 4 or more workloads, up 25% year over year. And Defender for Cloud, our cloud security solution, surpassed $1 billion in revenue over the past 12 months as we protect customer workloads across multi-cloud and hybrid environments. Now let me turn to our consumer businesses, starting with LinkedIn. LinkedIn continues to see accelerated member growth and record engagement. 1.5 million pieces of content are shared every minute on the platform, and video is now the fastest growing format on LinkedIn, with uploads up 34% year over year. LinkedIn Marketing Solutions continues to be a leader in B2B digital advertising, helping companies deliver the right message to the right audience on a safe, trusted platform. And when it comes to our subscription businesses, premium signups increased 51% this fiscal year, and we are adding even more value to our members and customers with new AI tools. Our reimagined AI-powered LinkedIn Premium experience is now available for every premium subscriber worldwide, helping them more easily and intuitively connect to opportunity, learn, and get career coaching. Finally, hiring took share for the second consecutive year. And now on to search, advertising, and news. We are ensuring that Bing, Edge, and Copilot collectively are driving more engagement and value to end users, publishers, and advertisers. Our overall revenue ex-TAC increased 19% year over year, and we again took share across Bing and Edge. We continue to apply generative AI to pioneer new approaches to how people search and browse. Just last week, we announced we are testing a new generative search experience which creates a dynamic response to users' query while maintaining click share to publishers. And we continue to drive record engagement with Copilot for the web. Consumers have used Copilot to create over 12 billion images and conduct 13 billion chats to date, up 150% since the start of the calendar year. Thousands of news and entertainment publishers trust us to reach new audiences with Microsoft Start, and in fact, we have paid them $1 billion over the last 5 years. We are helping advertisers increase their ROI too. We have seen positive response to Performance Max, which uses AI to dynamically create and optimize ads, and Copilot in Microsoft Ad Platform helps marketeers create campaigns and troubleshoot using natural language. Now on to gaming. We now have over 500 million monthly active users across platforms and devices, and our content pipeline has never been stronger. We previewed a record 30 new titles at our showcase this quarter. 18 of them, such as Call of Duty, Black Ops 6, will be available on Game Pass. Game Pass Ultimate subscribers can now stream games directly on devices they already have, including, as of last month, Amazon Fire TVs. Finally, we are bringing our IP to new audiences. Fallout, for example, made its debut as a TV show on Amazon Prime this quarter. It was the second most watched title on the platform ever, and hours played on Game Pass for the Fallout franchise increased nearly 5x quarter over quarter. In closing, I'm energized about the opportunities ahead. We are investing for the long term in our fundamentals, in our innovation, and in our people. With that, let me turn it over to Amy.
Thank you, Satya, and good afternoon, everyone. This quarter, revenue was $64.7 billion, up 15% and 16% in constant currency. Earnings per share was $2.95 and increased 10% and 11% in constant currency. In our largest quarter of the year, we again delivered double-digit top and bottom line growth with continued share gains across many of our businesses and record commitments to our Microsoft Cloud platform. Commercial bookings were significantly ahead of expectations and increased 17% and 19% in constant currency. This record commitment quarter was driven by growth in the number of $10 million plus and $100 million plus contracts for both Azure and Microsoft 365, and consistent execution across our core annuity sales motions. Commercial remaining performance obligation increased 20% and 21% in constant currency to $269 billion. Roughly 40% will be recognized in revenue in the next 12 months, up 18% year over year. The remaining portion, recognized beyond the next 12 months, increased 21%. And this quarter, our annuity mix was 97%. At a company level, Activision contributed a net impact of approximately 3 points to revenue growth, was a 2-point drag on operating income growth, and had a negative 6-cent impact to earnings per share. A reminder that this net impact includes adjusting for the movement of Activision content from our prior relationship as a third-party partner to first-party, and includes $938 million from purchase accounting adjustments, integration, and transaction-related costs. FX did not have a significant impact on our results and was roughly in line with our expectations on total company revenue, segment-level revenue, COGS, and operating expense growth. Microsoft Cloud revenue was $36.8 billion and grew 21% and 22% in constant currency, roughly in line with expectations. Microsoft Cloud gross margin percentage decreased roughly 2 points year over year to 69%, in line with expectations. Excluding the impact of the change in accounting estimate for useful lives, gross margin percentage decreased slightly, driven by sales mix shift to Azure, partially offset by improvement in Azure, even with the impact of scaling our AI infrastructure. Company gross margin dollars increased 14% and 15% in constant currency, and gross margin percentage decreased slightly year over year to 70%. Excluding the impact of the change in accounting estimate, gross margin percentage increased slightly, even with the impact from purchase accounting adjustments, integration, and transaction-related costs from the Activision acquisition. Operating expenses increased 13%, with 9 points from the Activision acquisition. At a total company level, headcount at the end of June was 3% higher than a year ago. Operating income increased 15% and 16% in constant currency, and operating margins were 43%, relatively unchanged year over year. Excluding the impact of the change in accounting estimate, operating margins increased slightly, driven by the higher gross margin noted earlier, and improved operating leverage through continued cost discipline. Now to our segment results. Revenue from productivity and business processes was $20.3 billion and grew 11% and 12% in constant currency, slightly ahead of expectations, driven by better than expected results across all business units. Office commercial revenue grew 12% and 13% in constant currency. Office 365 commercial revenue increased 13% and 14% in constant currency, with ARPU growth primarily from E5 momentum, as well as Copilot for Microsoft 365. Paid Office 365 commercial seats grew 7% year over year, with installed base expansion across all customer segments. Seat growth was again driven by our small and medium business and frontline worker offerings, although both segments continued to moderate. Office commercial licensing declined 9% and 7% in constant currency, with continued customer shift to cloud offerings. Office consumer revenue increased 3% and 4% in constant currency, with continued momentum in Microsoft 365 subscriptions, which grew 10% to 82.5 million. LinkedIn revenue increased 10% and 9% in constant currency, driven by better than expected performance across all businesses. Dynamics revenue grew 16%, driven by Dynamics 365, which grew 19% and 20% in constant currency. We saw continued growth across all workloads and better than expected new business. Dynamics 365 now represents roughly 90% of total Dynamics revenue. Segment gross margin dollars increased 9% and 10% in constant currency, and gross margin percentage decreased roughly 1 point year over year. Excluding the impact of the change in accounting estimate, gross margin percentage decreased slightly, driven by Office 365 as we scale our AI infrastructure. Operating expenses increased 5%, and operating income increased 12% and 13% in constant currency. Next, the Intelligent Cloud segment. Revenue was $28.5 billion, increasing 19% and 20% in constant currency, in line with expectations. Overall, server products and cloud services revenue grew 21% and 22% in constant currency. Azure and other cloud services revenue grew 29% and 30% in constant currency, in line with expectations and consistent with Q3 when adjusting for leap year. Azure growth included 8 points from AI services, where demand remained higher than our available capacity. In June, we saw slightly lower than expected growth and a few European geos. In our per-user business, the enterprise mobility and security installed base grew 10% to over 281 million seats, with continued impact from moderated growth in seats sold outside the Microsoft 365 suite. Therefore, our Azure consumption business continues to grow faster than total Azure. In our on-premises server business, revenue increased 2% and 3% in constant currency. Growth was driven by demand for our hybrid solutions, although was slightly lower than expected transactional purchasing. Enterprise and partner services revenue decreased 7% on a strong prior year comparable for enterprise support services. Segment gross margin dollars increased 16% and gross margin percentage decreased roughly 2 points year over year. Excluding the impact of the change in accounting estimate, gross margin percentage decreased slightly, driven by sales mix shift to Azure, partially offset by the improvement in Azure noted earlier, even with the impact of scaling our AI infrastructure. Operating expenses increased 5%, and operating income grew 22% and 23% in constant currency. Now to more personal computing. Revenue was $15.9 billion, increasing 14% and 15% in constant currency, with 12 points of net impact from the Activision acquisition. Results were above expectations, driven by Windows Commercial and Search. The PC market was as expected, and Windows OEM revenue increased 4% year over year. Windows Commercial products and cloud services revenue increased 11% and 12% in constant currency, ahead of expectations due to higher in-period revenue recognition from the mix of contracts. Devices revenue decreased 11% and 9% in constant currency, roughly in line with expectations, as we remain focused on our higher margin premium products. While early days, we're excited about the recent launch of our Copilot Plus PCs. Search and news advertising revenue ex-TAC increased 19%, ahead of expectations, primarily due to improved execution. Healthy volume growth was driven by Bing and Edge. And in gaming, revenue increased 44% with 48 points of net impact from the Activision acquisition. Xbox content and services revenue increased 61%, slightly ahead of expectations, with 58 points of net impact from the Activision acquisition. Stronger than expected performance in first-party content was partially offset by third-party content performance. Xbox hardware revenue decreased 42% and 41% in constant currency. Segment gross margin dollars increased 21% with 10 points of net impact from the Activision acquisition. Gross margin percentage increased roughly 3 points year over year, primarily driven by sales mix shift to higher margin businesses. Operating expenses increased 43% with 41 points from the Activision acquisition. Operating income increased 5% and 6% in constant currency. Now back to total company results. Capital expenditures, including finance leases, were $19 billion, in line with expectations, and cash paid for PP&E was $13.9 billion. Cloud and AI-related spend represents nearly all of our total capital expenditures. Within that, roughly half is for infrastructure needs where we continue to build and lease data centers that will support monetization over the next 15 years and beyond. The remaining cloud and AI-related spend is primarily for servers, both CPUs and GPUs, to serve customers based on demand signals. For the full fiscal year, the mix of our cloud and AI-related spend was similar to Q4. Cash flow from operations was $37.2 billion, up 29%, driven by strong cloud billings and collections. Free cash flow was $23.3 billion, up 18% year over year, reflecting higher capital expenditures to support our cloud and AI offerings. For the full year, cash flow from operations surpassed $100 billion for the first time, reaching $119 billion. This quarter, other income expense was negative $675 million, more favorable than anticipated, with lower than expected interest expense and higher than expected interest income. Our losses on investments accounted for under the equity method were as expected. Our effective tax rate was approximately 19%, higher than anticipated due to a state tax law signed in June that was effective retroactively. And finally, we returned $8.4 billion to shareholders through dividends and share repurchases, bringing our total cash returned to shareholders to over $34 billion for the full fiscal year. Now, moving to our outlook. My commentary for both the full year and next quarter is on a U.S. dollar basis, unless specifically noted otherwise. Let me start with with some full-year commentary for FY25. First, FX. Assuming current rates remain stable, we expect FX to have no meaningful impact to full-year revenue, COGS, or operating expense growth. Next, we continue to expect double-digit revenue and operating income growth as we focus on delivering differentiated value for our customers. To meet the growing demand signal for our AI and cloud products, we will scale our infrastructure investments with FY25 capital expenditures expected to be higher than FY24. As a reminder, these expenditures are dependent on demand signals and adoption of our services that will be managed through the year. As scaling these investments drives growth in COGS, we will remain disciplined on operating expense management. Therefore, we expect FY25 OPEX growth to be in the single digits. And given our focused commitment to managing at the operating margin level, we still expect FY25 operating margins to be down only about 1 point year over year. And finally, we expect our FY25 effective tax rate to be around 19%. Now, to the outlook for our first quarter. Based on current rates, we expect FX to decrease total revenue and segment-level revenue growth by less than 1 point. We expect FX to decrease COGS growth by less than 1 point and to have no meaningful impact to operating expense growth. In commercial bookings, increased long-term commitments to our platform and strong execution across core annuity sales motions should drive healthy growth on a growing expiry base. As a reminder, larger long-term Azure contracts, which are more unpredictable in their timing, can drive increased quarterly volatility in our bookings growth rate. Microsoft Cloud gross margin percentage should be roughly 70%, down year over year, driven by the impact of scaling our AI infrastructure. We expect capital expenditures to increase on a sequential basis given our cloud and AI demand, as well as existing AI capacity constraints. As a reminder, there can be quarterly spend variability from cloud infrastructure buildouts and the timing of delivery of finance leases. Next is segment guidance. In productivity and business processes, we expect revenue to grow between 10 and 11% in constant currency, or $20.3 to $20.6 billion US dollars. In Office Commercial, revenue growth will again be driven by Office 365 with seat growth across customer segments and ARPU growth through E5 and Copilot for Microsoft 365. We expect Office 365 revenue growth to be approximately 14% in constant currency. In our on-premises business, we expect revenue to decline in the mid to high teens. In Office Consumer, we expect revenue growth in the low to mid-single digits, driven by Microsoft 365 subscriptions. For LinkedIn, we expect revenue growth in the high single digits, driven by continued growth across all businesses. And in Dynamics, we expect revenue growth in the low to mid-teens, driven by Dynamics 365. For Intelligent Cloud, we expect revenue to grow between 18 and 20% in constant currency, or $28.6 to $28.9 billion US dollars. Revenue will continue to be driven by Azure, which, as a reminder, can have quarterly variability primarily from our per-user business and in-period revenue recognition, depending on the mix of contracts. In Azure, we expect Q1 revenue growth to be 28 to 29% in constant currency. Growth will continue to be driven by our consumption business, inclusive of AI, which is growing faster than total Azure. We expect the consumption trends from Q4 to continue through the first half of the year. This includes both AI demand impacted by capacity constraints and non-AI growth trends similar to June. Growth in our per-user business will continue to moderate. And in H2, we expect Azure growth to accelerate as our capital investments create an increase in available AI capacity to serve more of the growing demand. In our on-premises server business, we expect revenue to decline in the low single digits as continued hybrid demand will be more than offset by lower transactional purchasing. And in enterprise and partner services, revenue should decline in the low single digits. In more personal computing, we expect revenue to grow between 9 and 12% in constant currency, or $14.9 to $15.3 billion US dollars. Windows OEM revenue growth should be relatively flat, roughly in line with the PC market. In Windows commercial products and cloud services, customer demand for Microsoft 365 and our advanced security solutions should drive revenue growth in the mid-single digits. As a reminder, our quarterly revenue growth can have variability, primarily from in-period revenue recognition, depending on the mix of contracts. In devices, revenue growth should be in the low to mid-single digits. Search and news advertising ex-TAC revenue growth should be in the mid to high teens. This will be higher than overall search and news advertising revenue growth, which we expect to be in the low single digits. And in gaming, we expect revenue growth in the mid-30s, including approximately 40 points of net impact from the Activision acquisition. We expect Xbox content and services revenue growth in the low to mid-50s, driven by the net impact from the Activision acquisition. Hardware revenue will again decline year over year. Now back to company guidance. We expect COGS between $19.95 to $20.15 billion US dollars, including approximately $700 million from purchase accounting, integration, and transaction-related costs from the Activision acquisition. We expect operating expense of $15.2 to $15.3 billion US dollars, including approximately $200 million from purchase accounting, integration, and transaction-related costs from the Activision acquisition. Other income and expense should be roughly negative $650 million, driven by losses on investments accounted for under the equity method, as interest income will be mostly offset by interest expense. As a reminder, we are required to recognize gains or losses on our equity investments, which can increase quarterly volatility. We expect our Q1 effective tax rate to be approximately 19%. In closing, we remain focused on delivering innovations that matter to our global customers of every size. That focus extends to delivering on our financial commitments as well. We delivered operating margin growth of nearly 3 points year over year, even as we accelerated our AI investments, completed the Activision acquisition,
S&P,
and had a headwind from the change of useful lives last year. So as we begin FY25, we will continue to invest in the cloud and AI opportunity ahead, aligned and, if needed, adjusted to the demand signals we see. We are committed to growing our leadership across our commercial cloud and within that, the AI platform. And we feel well positioned as we start FY25. With that, let's go to Q&A, Brett.
Fantastic.
We'll now move over to Q&A. Out of respect for others on the call, we request that participants
please tap the like
only
button,
ask
folks.
one question. Operator, can you please repeat your instructions?
Ladies and gentlemen, if you would like to ask a question, please press
I will be providing a chart video for Microsoft, how to trade it, and NVIDIA at the end of the show.
You may press star 2
It'll be out about
if you
an
would like to remove your
hour after
question
the
from
show
the
finishes.
queue. For participants using speaker equipment, it may be necessary
Easy to
pick
make
up your
money. The
handset
hard part
before
is to
pressing
keep
the star
it.
keys. And our first question comes from the line of Keith Weiss with Morgan Stanley. Please proceed.
Excellent. Thank you guys for taking the question, and congratulations on another great quarter and really solid overall fiscal year. Right now, there's a industry debate raging around the CapEx requirements around generative AI and whether the monetization is actually going to match with that. And I think the question for you guys from a Microsoft perspective is CapEx still an appropriate leading indicator for cloud growth, or do the shifting gross margin profiles change that equation? Or said another way, maybe can you give us a little bit more help in understanding the timing between the CapEx investments and the yields on those investments? Thank you.
Thank you, Keith. Let me start, and then Amy can add to this. I think I would say we primarily start right now from the demand side. What I mean by that is what's the product shape of the product portfolio? What we learned even from the cloud transition, which, as you know, Keith, was similar in the sense it was both a knowledge-intensive and a capital-intensive transition. We needed to have the product portfolio where there was the right mix of, I'll call it, infrastructure, meters, as well as SaaS applications. So that's the first thing that we are looking at. And how is that value landing with customers, and what's the growth rate? So when I think about what's happening with M365 Copilot as perhaps the best Office 365 or M365 suite we have had, the fact that we're getting recurring customers or customers coming back buying more seats, or GitHub Copilot now being bigger than even GitHub when we bought it, what's happening in the contact center with Dynamics. So I would say, and obviously the Azure AI growth, that's the first place we look at. That then drives bulk of the CapEx spend. Basically, that's the demand signal. Because you've got to remember, even in the capital spend, there is land and there is data center build, but 60+% is the kit. that only will be bought for inferencing and everything else if there is demand signal. Right? So that's, I think, the key way to think about capital cycle even. The asset, as Amy said, is a long-term asset.
I was spot
which
on.
Is land in the data center, which, by the way, we don't even construct
Our
things
prediction
fully.
was spot
we can
on.
even have things which are semi-constructed, we call cold shells and so on. So,
good luck, everybody.
We know how to manage our CapEx spend to build out a long-term asset. And a lot of the hydration of the kit happens when we have the demand signal. There is definitely spend for training. Even there, of course, we will only be scaling training as we see the demand accrue in any given period in time. So I would say it's more important to manage to capture the opportunity with the right product portfolio that's driving value. And on that front, I feel good about the breadth of Microsoft offering, whether it's in consumer side, whether it's on commercial per seat side or on the consumption meters. That's, I think, the fundamental driver.
And Keith, I do think, and I really do appreciate how you phrased the question as well, because I think the timing and some of the questions you all have had really led to how we were talking even about capital expense in our comments and in my comments today. Being able to maybe share a little more about that, when we talked about roughly half of FY24's total capital expense, as well as half of Q4's expense, it's really on land and builds and finance leases, and those things really will be monetized over 15 years and beyond. And they're incredibly flexible because we've built a consistent architecture, first with a commercial cloud and second with the Azure Stack for AI. Regardless of whether the demand's at the platform layer or at the app layer or through third parties and partners or, frankly, our first-party SaaS, it uses the same infrastructure. So we've got long-lived, flexible assets. And if you think about it that way, you can see what we're doing and focused on is building out this network in parallel across the globe. Because, when we did this last transition, the first transition to the cloud, which seems a long time ago sometimes, it rolled out quite differently. We rolled out more geo by geo. And this one, because we have demand on a global basis, we are doing it on a global basis, which is important. We have large customers in every geo. And so hopefully with that sort of shape of our capital expense, it helps people see how much of that is sort of near-term monetization driver as well as a much longer duration.
That's super helpful. Thank you very much.
Thanks, Keith. Operator, next question, please.
And the next question comes from the line of Mark Mordler with Bernstein Research. Please proceed.
Thank you very much. Thank you for taking the question, and congrats on a strong year. Gen AI has been a bit of a roller coaster for tech over the last year, with periods of acceleration, high expectations, and the expectations drop as reality kicked in. With Azure growth we've seen this quarter, and O365 commercial not yet fully visible in numbers, even though, Amy, you gave us a lot of color on it. Two quick parts to the question. So, Satya, how should we think about what it's going to take for Gen AI to become more real across the industry and for it to become more visible within your SaaS offerings? And Amy, with cloud, it took time for margins to improve. It looks like with AI, it's happening quicker. Can you give us a sense of how you think about the margin impact near-term and long-term from all the investment on AI? Thank you.
Yeah, thanks again, Mark, for the question. So to me, look, at the end of the day, Gen AI is just software. So it is really translating into fundamentally growth on what has been our M365 SaaS offering with a new offering that is the Copilot SaaS offering, which today is on a growth rate that's faster than any other previous generation of software we launched as a suite in M365. That's, I think, the best way to describe it. I mean, the numbers I think we shared even this quarter are indicative of this, Mark. So if you look at it, we have both the landing of the seats itself quarter over quarter that is growing 60%, right? That's a pretty good, healthy sign. The most healthy sign for me is the fact that customers are coming back. That is the same customers with whom we landed the seats coming back and buying more seats. And then the number of customers with 10,000 plus seats doubled, right? It's 2x quarter over quarter. That to me is a healthy SaaS core business. And on top of that, some of the things that Amy shared are on Dynamics. That's another exciting place for us, which is one, we're gaining share. We're Dynamics with Gen AI built in is sort of really biz apps is probably the category that gets completely transformed with Gen AI. Contact centers being a great example. We ourselves are on course to save hundreds of millions of dollars in our own customer support and contact center operations. So I think we can drive that value to our customers. And then on the Azure side, you see the numbers very clearly. In fact, I think last quarter is when we started giving you that. You saw an acceleration of that this quarter. One of the other pieces, Mark, is AI doesn't sit on its own, right? So it's just we have a concept of design wins in Azure. So in fact, 50% of the folks who are using Azure AI are also using a data meter. That's very exciting to us because the most important thing in Azure is to win workloads in the enterprise. And that is starting to happen. And these are generational things once they get going with you. So that's, I think, how we think about it, at least when I look at what's happening on our demand side.
And Mark, to answer the second half of your question on margin improvement looking different than it did through the last cloud cycle, that's primarily for a reason I've mentioned a couple times. We have a consistent platform. So because we're building to one Azure AI stack, we don't have to have multiple infrastructure investments. We're making one. We're using that internally, first party, and that's what we're using with customers to build on as well as ISVs. So it does, in fact, make margins start off better and obviously scale consistently.
Thank you.
Thanks, Mark. Operator, next question, please.
The next question comes from the line of Kash Rangan with Goldman Sachs. Please proceed.
Hi, thank you very much, and congrats on a great fiscal year ending. Question for you, Amy. When you look at the CapEx, how do you wring efficiencies out of the CapEx? You disclosed that 50% of that was infrastructure, the other 50% tech is very useful. So in other words, do you have to keep growing CapEx at these elevated rates, or could you slow down CapEx and still get that consistent revenue growth rate in your Azure and generative AI? That's the main question on my mind. Thank you so much.
Thanks, Kash. That's a very good question. There's really two pieces, I think, as I heard your question that I would reflect on. The first is, could we see sort of consistent revenue growth without maybe what you would say is more of this sort of elevated capital expense number or something that continues to accelerate? And the answer to that is yes, because there's two different pieces, right? You're seeing half of this go toward long-term builds that Satya mentioned. The pace at which we fill those builds with CPUs or GPUs will be demand-driven. And so if we see differences in demand signal, we can throttle that investment on the CPU side, which we've done for, I guess, a long time at this point, as I reflect. And we'll use all that same learning and demand signal understanding to do the same thing on the GPU side. And so you're right that you could see relatively consistent revenue patterns and yet see these inconsistencies in capital spend quarter to quarter. The other thing I would note, Kash, is you'll also notice there's a sort of growing distinction between our CapEx number and on occasion the cash that we pay for PP&E. And you're going to start to see that more often in this period because it happens when we use leases. Leases sort of show up all at once, and so you'll see a little bit more volatility. I've mentioned that in my comments before, but I mention it again just because you're starting to see that distinction in my comments, and hopefully that's helpful context.
Just one other thing, Amy, if I wanted to add. I think as people think about capital spend, I think it's important to separate out leases from build. And when it comes to build, I think it's important for us to think about it in terms of what's the total percentage of cost that goes into each line item. Land, which obviously has a very different duration and a very different lead time. So those are the other two considerations. We think about lead time and duration of the asset. Land, network, construction, the system or the kit, and then the ongoing cost. And so if you think about it that way, then you know how to even adjust, if you will, the capital spend based on demand signal.
Thank you. It was triggered by the jump in CapEx, and as Amy pointed out, you're guiding to accelerating Azure revenue growth rate, which I guess follows the CapEx surge. Thank you so much once again.
Thanks, Kash. Operator, next question, please.
The next question comes from the line of Brent Thill with Jefferies. Please proceed.
Thanks. Amy, the magnitude of beat this quarter was a little lower than we've seen in the past. Was there anything unusual on sales cycles or close rates that you saw? Thanks.
Thanks, Brent. Actually, no. As I was talking on the corner, commercial bookings were much better than we expected going into the quarter. Commitments were very good. Execution across both the core sort of annuity renewal motion was good as expected. The larger long-term commitments were better than we expected. So, Brent, I would not say there was anything really unusual in how I thought about and what we saw in our commercial execution through the quarter.
Great, thank you.
Thanks, Brent. Operator, next question, please.
The next question comes from the line of Karl Keirstead with UBS. Please proceed.
Okay, great. So maybe I'll direct this to Amy. Amy, I know when you set your Azure guidance, you're always looking to meet or beat the high end. The 30% you put up in the June quarter, amazing number given the scale of Azure, but it did come in at the low end of your range. And I just love for you to maybe elaborate on the delta. I guess as I reflect on what you've said in your comments, there's two things that I heard you say. One, it sounded like there's persistent capacity constraints that you think might get alleviated in the second half. And then secondly, you mentioned perhaps some modest softness in Europe. I presume that's a little bit more economic rather than Azure specific. Is that the right way to frame the performance in the quarter? Thank you.
Thanks, Karl. Yes, that's exactly right. Maybe I'll just repeat it just so people can hear it in my words as well. To that 30 to 31% guide for Q4 and coming in at the lower end at 30. You're exactly right. The distinguishing between being at the higher end or at the lower end really was some softness we saw in a few European geos on non-AI consumption. Really, made the difference in that number, and we've assumed that going forward into H1, inclusive of my guide in 28 to 29 going forward. And then let me separate, which was your larger point, which is what are the other factors you see ongoing. Number one, you're right, capacity constraints, particularly on AI at Azure, will remain in Q4 and will remain in H1. So hopefully that's helpful.
Yeah. Thank you, Amy.
Thanks, Karl. Operator, next question, please.
The next question comes from the line of Brad Zelnick with Deutsche Bank. Please proceed.
Great. Thank you very much. Amy, with Azure demand once again greater than available capacity, I appreciate the CapEx investments and the build-out and acceleration you expect in the back half. But as we think about cloud capacity and AI services specifically, can you talk about both the near-term and long-term strategy around the AI partnerships that you're signing with the likes of Oracle and CoreWeave, for example? Thank you.
Thanks, Brad. Maybe separate a couple of things. We are, and we've talked about it, I think, now for quite a few quarters, we are constrained on AI capacity. And because of that, actually, we've, to your point, have signed up with third parties to help us as we are behind with some leases on AI capacity. We've done that with partners who are happy to help us extend the Azure platform. to be able to serve this Azure AI demand. And you do see us investing quite a bit, as we've talked about, in builds so that we can get back in a more balanced place.
Yeah, I mean, to me, it's no different than leases that we would have done in the past. You could even say sometimes buying from Oracle, maybe even more efficient leases because they're even shorter date.
Excellent. Thanks for the color.
Thanks, Brad. Operator, next question, please.
The next question comes from the line of Mark Murphy with J.P. Morgan. Please proceed.
Thank you very much. With a couple quarters of Copilot for M365 availability under your belt now, how are you assessing the capability of Copilots to replicate the productivity gains that they've created for developers, which seem to be very high, and to do something similar for the broader population of knowledge workers? For instance, you're mentioning the 10,000 seat deals, the repeat purchases. Is it possible to eventually see Copilot penetration rates equally high in Office as they will be in GitHub?
Yeah, that's a great question. In fact, the GitHub design system and the GitHub Copilot workspace design system, which now, for example, you start with an issue, you create a plan. From a plan, you create a spec. Or you create a spec, and from a spec, you create a plan, and then you go operate across the full repo. That's effectively the design system that is getting replicated inside of even the M365 Copilot. And you see this even now. For example, you get an email, you're in sales, you want to respond to the customer. The data from the email is essentially context for a prompt, but you expand by bringing in all of your CRM data, right? So this customer email is in the context of some order. All of the CRM record gets completed in context, and a reply gets generated with the CRM data. That's the type of stuff that's already happening. Then you take something like Copilot Studio, you can start even grounding it in more data and then completing workflows. So you could say, if this email comes from this customer whose order date is, got a particular issue with it, you can then go and escalate it to somebody else who gets a notification in Teams. And those are the kinds of workflows that are getting built within IT or by end users themselves. What used to be line of business applications to us are Copilot extensions going forward. So we think of this as really a new design system for knowledge and frontline work to drive productivity, which would be very akin to what has happened in software engineering. So when you think about marketing or finance or sales or customer service, we will effectively replicate what you just said, which is the type of productivity we've seen in developers will come to all of these functions as they think about their work, workflow, and work artifact, all being driven by Copilots.
Thank you very much.
Thanks, Mark. Operator, we have time for one last question.
And the last question will come from the line of Keith Bachman with BMO Capital Markets. Please proceed.
Hi, good evening, and thank you for the opportunity to ask a question. I actually wanted to veer towards gaming, if I could, for a second. Xbox Content Services revenue grew 61%, 58 points help from Activision. So net is about 3 points of growth. How should investors think about the longer-term growth potential in this area? You've made significant investments, including the Activision deal. But how should investors be thinking about the growth potential of the gaming area? What are the puts and takes to help make considerations here? Thank you.
Yeah, for us, our investment in gaming fundamentally was to have, I would say, the right portfolio of both what we love about gaming and always have loved about gaming, which is Xbox and the content for the console, and expand from there so that we have content for everywhere people play games, starting with the PC. So when I think about the Activision portfolio, it comes with great assets for us to cover both the PC and the console. And then, of course, assets to cover mobile sockets, which we never had. So we feel that now we have both the content and the ability to access all the traditional high-scale platforms where people play games, which is the console, PC, and mobile. But we're also excited about these new sockets, right? I mean, the fact that even in this last quarter, we expanded xCloud to Amazon TV. I forget the name of what it's called, but that's the type of new access that really helps us a lot reach new gamers or the same gamer everywhere they want to play. And that ultimately will show up in that software plus services and transaction revenue for us, which is really our long-term KPI. And that's what we're building towards. And that was the strategy behind Activision as an asset. Amy, if you wanted to add to it.
No, I do think the real goal here is to be able to take a broadened set of content to more users in more places and really build what looks more like, to us, a software annuity and subscription business with enhanced transactions and the ownership of IP, which is quite valuable long-term. As Satya mentioned, things where with the ownership of IP, it can be monetized in multiple ways. And I think we're really encouraged by some of the progress and how we're making progress with Game Pass as well with some of the new announcements. Thank you, Keith.
Thanks, Keith. That wraps up the Q&A portion of today's earnings call. Thank you for joining us today, and we look forward to speaking with all of you soon.
Thank you.
Okay, Microsoft earnings. Now then, how to make money out of this. This is fantastic. It's exactly as expected, when exactly as we said. NVIDIA bounced off 100, exactly what we said. It was a good earnings. We got a 2x of NVIDIA. No doubt about it. A 3x of the S&P by the end of the decade. Fantastic. This is why I'm all in with my margin, all in with my investments. No cash on the side. Been buying the macro dips. This is fantastic. This has gone exactly as planned. People transferred from high-quality stocks to the Russell rubbish. They'll all be back very, very quickly. The Russell will collapse, and you'll see it all come straight into here. Now then, how can you make money on this? We've got some very big announcements for you now. We're going to end this show right now, and we're going to send you automatically, plus I've just given you a link in the chat to the extra channel. Right, this is what we're going to do now. We're going to go live to the extra channel. This is where I'm live 12 hours a day. You can listen into what I'm saying when I'm talking to my CEOs, interviews, the private calls. I share it all here. And you can all chat here in the chat, okay? All of you here. What I'm going to do now is I'm going to put together the charts so you can trade Microsoft to make money should you wish to trade. I am not selling any of mine. I'm fully invested. This is my portfolio. I have $150,000 total invested. My actual balance is $103,530. $150,000 is fully invested. I'm fully in, not selling a single share. I've not sold a single share all year, and I've got no intention of selling anything. So what I'm going to do now is send you all automatically to the extra channel. You can talk amongst yourselves, hear what's going on. NVIDIA is exploding right now. It's going up really quickly. A company of this size to go up nearly 5% in after hours is huge. And also, we're going to see the same thing with AMD. We're seeing the same thing with Microsoft. This is fantastic. NVIDIA is bound to beat earnings, a 2x on NVIDIA and a 3x on S&P 500 by the end of the decade. Really, really great. So we're going to go to the extra channel. I'm going to put out the NVIDIA and Microsoft charts so you can trade and make money on these stocks. Remember, the purpose of my channel is not to get you to subscribe to me, make me money. I only own the S&P. I am not here to pump and dump stocks, but I am here to do a good job and help people, okay? So we provide you the charts. We're going to put them out. If you go into the extra channel, hang in there. I will put the link the moment it comes out. Remember, you can trade the NVIDIA and Microsoft 24 hours a day, 5 days a week. It's open right now on on Robinhood. If you've not got Robinhood, let me give you the link right now. Here is your Robinhood in the United States. If you sign up, I'll also pay for 4 months your gold membership if you are one of those that helped me get the gold card, and I've explained that on the show. If you are in the UK, here is the link. You can trade Microsoft, Nvidia 24 hours a day, 5 days a week. Let me also give you this one here. If you don't want gold, but you want the free stocks, there it is. Right. So I'm going to send you now to the extra channel. Nvidia is flying up exactly like we said it would. You want to make money on this. You want to know where the buy zones, sell zones. Stand by. I will get the chart video out as soon as possible. The moment I publish it, I will drop the link in there. Remember, it's completely impartial. It's not there to benefit me. It's there to help you trade. I only own the S&P. I'm not pumping and dumping stocks, okay? All right. So join us now in the extra channel, and I will give you the link as soon as the video's out. What's that on my sleeve? Right, nothing. It's a bit of a hair. And I'm back early in the morning. We've got the big FOMC report tomorrow. That's when the markets are going to go mad on the back of all of this. Lots of money is going to be made tomorrow. This is the FOMC report. We're going to cover it live, and we've got the opening bell in the morning. Upcoming live streams here on the homepage of the channel. Okay, right. Join me now for the extra. I'm going to get to work very, very quickly now and get you your charts for Microsoft and Nvidia. You cannot afford to miss it. It's really important that you see those charts. We've just put them together for you, and I'm just about to put it out. So join me now on the extra channel. I will see you back over there now on the extra, and I will give you the videos as soon as I put them out. Thank you very much indeed. I've given you the link to the extra. You've got it in the chat. It's pinned to the top. I'll give it you one more time, and it'll also go there automatically as well. Here it is. Any links for EU people? Thank you, Martin. Not yet. I'm sorry. It's only available at the moment to the UK and to the US. However, what I will give to you now, there is the extra. I will give you this. This is my all links button, martynlucas.com. You can sign up for a free newsletter. I've got lots of links on that page giving you in Europe free stocks. There's free crypto. I've got all sorts of stuff that my sponsors give to me. I just give to you. Go down the list, have a little look, get the newsletter, and I'll send you all sorts of freebies as well. I'll just give it all away, okay? Plus the free training on Discord if you want that. We don't charge you for it. It's free. Okay, that's it from me. I'll see you back on the extra live right now for those links in just a moment. Thank you very much indeed. Brilliant. I'm so excited. Everyone's going to make a lot of money. At least you are if you are investing the way we do it here on the channel. See you back in a minute on the extra channel and back in the morning for more live entertainment, live all day. Bye-bye for now.